Hey traders, welcome back to the channel. In today's video, I want to tackle the question as to whether you want to set a tight stop loss or you want to set a wide stop loss. And in which cases should you set a tight stop loss and in which scenarios should you set a wider stop loss. So what I have right here is the position size calculator. Okay, so in case you do not know, the smaller your stop loss, meaning that the tighter your stop loss, you basically can have a bigger position size, and that would mean that you are able to make more money from any given trade. So I have put out this position size calculator just to show you the math behind this whole setting of stop loss, to show you that when you have a tighter stop loss, you can have a bigger position size. So this position size calculator, let's assume that your account size is 10,000 and you're risking 1% per trade. So that's about $100 per trade. So if you're wrong, you're going to lose $100. And let's say you're trading euro dollar and your stop loss is 30 pips. So what happens when you do this is that if your stop loss is 30 pips, you can trade a position size of 0.333. Okay, so what happens is that if, let's say, your stop loss is wider and your stop loss in this case, let's say, is 60 pips, what happens is that you can see that your position size is half, meaning that right now, if you have a stop loss of 60 pips, you can only trade 0.167 lots. So what happens is that your risk reward goes down whenever you have a bigger stop loss. And that is why personally I love having a tight stop loss. But just in a moment's time, what I want to do is I want to show you when you should do it, or depending on where you are in your trading journey, whether you should be using a tight stop loss or you should be using a wider stop loss. Okay, because a tight stop loss requires that you have accuracy. So the first thing I want to do is I just want to illustrate this concept on the chart first, just to drive home the point about why the tighter the stop loss, the better it is. Okay, let's say you enter over here. Okay, let's say your entry is somewhere over here. Let's just pretend, and let's say that you put the stop loss below here, and let's say that your target is somewhere here. Now you can see that this trade over here. Let me just draw it here. Okay, this trade, let's say you set it up this way and you hit your take profit, it's about 1:4.85. That means that for every dollar you risk, you're going to make $4.85. Let's say this same trade, you decide to be safer a bit, and you enter the same level, but because you want to be safe and you don't want to put your stop loss below here, you want to put it wider just to be safe, and you put it below this swing low. Okay, there's nothing wrong with having a wider stop loss. Okay, just want to clarify that. Let's say you were to do it like that, and you have the same take profit. So your entry is the same, your take profit is the same, but your stop loss is wider. What happens is that you are only going to make 1:1.71. That means for every dollar, you're only going to make $1.71 back. So you can see that in this kind of scenario, you are much better off because your risk to reward is better. And that means that you can afford to get it wrong more times compared to this. Because this one, if every dollar you risk, you're making $4.85, you do not even need to be right 20% of the time. You can be right 20% of the time and still make money, compared to this one, which if you are right 20% of the time, you are going to lose money. Because net, let's say out of 10 trades, one trade, 2 trades is profitable, you're only going to make about $3.40, and you're going to lose about $8. So this is why you want to always have a tight stop loss. Okay, so by the way, if you are new to our channel, you have not watch our other videos, right? Please feel free to check out our other videos. Okay, right? Please give us a thumbs up if you enjoyed this video. What I'll do next is I'll go through when you should do each of this. Okay, because having a tight stop loss is not for anyone. Okay, but we also have a 3-day trading guide for you. So the link is in the description, right? Please feel free to download it, right? It's a very comprehensive guide as to how to approach trading in a systematic manner. Okay, make sure you hit the subscribe button as well. I really appreciate it if you just give us a thumbs up. Okay. So back to today's topic, when should you use a tight stop loss and when should you use a wide stop loss like this, okay? Now, it depends on your trading journey. currently. If you are already quite accurate as a trader, you can find turning points like this well, then you want to opt for this kind because you have the necessary skill set to pull this off. You are accurate, you are reading price action in real time, you know how to read price action, then you should be using a tighter stop loss because it will impact your trading results drastically. You can see over here, this one is 4.85, this one is 1.71. But let's say you are the other type of trader, you just started, you're still struggling, you're not yet profitable, then you should be using a wider stop loss because you are not accurate yet. You do not have the skill set to read price accurately. If you use a tighter stop loss, there is a probability that, price does something like this. Okay, it just comes down, takes you out, and goes up. So in this scenario where you have a tight stop loss, you need to be very accurate. You need to be able to pinpoint where your support and resistance are. You need to be very good at reading price. So if you are still new, I would advise you to start off with this, okay? Your job is not so much to focus on making big money, but rather your job is just to try to get to, break even or just slightly profitable, okay? So it really depends on where you are in the trading journey, okay? I've seen a lot of traders, they make this mistake, they follow our channel, they try to replicate what we do, have a very tight stop loss, and they can't do it because they do not yet have the skill set. Okay, so it's really a sequential thing. It's something that you grow into, something that you develop over time. So if you are still struggling, stick to this before you move to this. And over time, you can slowly transition to this. When you feel that, you are getting better, okay, you can slowly, over time, just tighten it a bit, tighten it a bit, tighten a bit, tighten a bit. You do not have to, see it as either this or this. Either I set a very wide stop loss or I set a very tight stop loss. Okay, it can be both. It can, meaning that you can slowly, just reduce, as you realize that, okay, I'm getting a bit more accurate. Maybe this time I'll try, a stop loss that is not so wide. Maybe I'll just put it somewhere here. Maybe, you slowly adjust it over, a period of time, okay? Not just one or two trades, but maybe over a couple of months. As you find yourself getting more accurate, then you want to tighten your stop loss to increase your risk to reward. So hopefully that is clear, right? So thanks for watching this very short training. Okay, if you have any other questions, this was actually one question that one of our subscribers had. So I will just record this short video just to address this question. But if you have any other questions, just leave a comment down below or email us at support@financialmarketresearch.com. Right, we love to help you. We will record a video just like this to solve any questions that you have. Okay, we really are here to serve you, to help you. So really, really appreciate if you just take 3 seconds of your time to like this video and hit the subscribe button. If not, thanks for watching. I'll see you in the next video.